Okay. We're over here. Nope. Okay, today I just want to go over some crypto slang because we think we know all the crypto slang, but a lot of times we don't, and we have to learn the hard way. There's some in here that I actually didn't even know, so we'll go into it. I'm sure some of you know most of these, some of these, maybe some people don't know any of this crypto slang, but you're definitely going to hear it in chat boxes, on social media, on forums, Reddit. When you're surfing and doing research about cryptocurrency, you're going to hear this stuff. So why not know what it means when you do hear it, or see it, or read it. So recently you became obsessed with Bitcoin and cryptocurrency, and you discovered the vast treasure trove of knowledge contained in the rich and ever-growing crypto Twitter Reddit universe. Well, hold on there, Tiger. The crypto community has a language of its own, and if you don't know what you're doing, you'll be labeled a noob faster than a salty crypto OG can dump his bag of Dogecoin on you. So brave trader, here is a crypto slang guide that should keep you out of trouble long enough to learn the respect of the crypto Illuminati. For more crypto investing wisdom, well, I guess this is from the Crypto Traders Lounge, Cryptocurrency Traders Lounge. But there's a few of these online, and there are the links in the description if you want to refer back to it. Bitcoin. Some of these are going to seem stupid and just obvious, but others are actually going to teach you something. Bitcoin. The thing you buy so you can buy more altcoins. Altcoin, aka alt, any cryptocurrency that's not Bitcoin, or alternative to the first cryptocurrency, which was Bitcoin. Altcoins being usually knockoffs, trying to either be Bitcoin, profit like Bitcoin profited, something like that. So they're alternative to the real cryptocurrency, which was Bitcoin. But some altcoins are actually creating better technology than Bitcoin itself. So not all altcoins are bad. Fiat. Any money that's not Bitcoin or altcoin. Crypto maximalists are very skeptical of fiat. Bonus style points if you never hedge into fiat. Even when Bitcoin drops by $1,000 in a day. And you can hedge into a fiat cryptocurrency like fiat-backed cryptocurrency like Tether, Steam-backed dollars. There's a couple other ones out there now. But you know, trading your crypto or your Bitcoin into fiat currency, you're not a real cryptocurrency enthusiast, because then, you know, you're profiting off the crypto just to turn it back into dollars. And fiat is currency that is controlled by the Federal Reserve. It's inflationary. It goes down over time. There's lots of things about fiat that make it, you know, not as good of a currency as cryptocurrencies. For the cryptocurrency enthusiasts, they're very serious about this. So fiat is just paper money, basically. Satoshi, aka sats, the basic unit of Bitcoin, kind of like a Bitcoin penny. But instead of 1/100th, a Satoshi is 100 millionth. So 1/100 millionth of a Bitcoin. So a really small penny. I think there's a measurement called bits that is a bit bigger than Satoshis. So when you talk about the price of an altcoin, use Satoshis, but call them sats, as in bro. Did you pick up any P-Toy back when it was 7K sats. And usually when you write the symbol of the cryptocurrency, you would put a $ before it rather than a hashtag. I've noticed this on social media as well. Bag. You don't have a portfolio in crypto, you just have a bunch of bags. When you buy an altcoin, just say you started a new bag. This can either be used in a positive way, as in, hey guys, just started a bag of IFT, or a negative way, as in I bought Zcash and it dumped. So now I'm a bag holder. Zcash was one of the biggest dumps. It went down after it was released a lot, that I saw anyways. It's good technology, but I think they just ran it wrong. They gave too many tokens to their developers and the people that ran the project, giving it a huge evaluation that just didn't make any sense. And they sold the coins for a lot more than the market valued them as, so it dropped in price. Catalyst. With bag, you can be a bag holder because you're stuck in that trade and you don't want to sell for lower than you bought them for. So this bagging you or weighing you down like a bag. Catalyst. The excuse of crypto asset needs in order for a proper pump to start. The excuse a crypto asset needs in order for a proper pump to start. A catalyst. Yeah, that's pretty simple, straightforward. Can be news, listing on a new exchange, or an AMA with the devs. Pump. When the price goes up really quick, could be due to a catalyst, a P&D group. A P&D group being a pump and dump group, so you might see that as well, P&D. Normal market cycles are seemingly no reasons at all. Dump. When the price goes down really quick, especially bad if you were expecting a pump. See also retrace. And something you might see as well, I don't think it's on here, would be more when you're doing research into these companies. You'll see things like DApp, which is a decentralized application, and more technical terms like that as well. There's one of them, maybe if I can remember a couple more, I'll let you know what they mean as well. FUD, the other primary emotion that wrecks traders. Sorry, I'm at FOMO. One of the two primary emotions that cause you to make exactly the wrong decision and lose money. FOMO, or fear of missing out, causes you to buy the top. When you buy a crypto that already went up 50% in a day because, oh my god, what if I don't get in now and it goes even higher? That's FOMO. So lots of people are FOMOing on Bitcoin. And a lot of people didn't get in until they felt this FOMO. And that actually pushed a lot of people to get in. FUD. The other primary emotion that wrecks traders. FUD is fear, uncertainty, and doubt. And it causes you to sell the bottom. I've been a victim of this a few times. This one is caused by some sort of bad news, like China banning Bitcoin exchanges, which then causes a wave of panic selling. And sometimes you'll buy a coin, it'll go down a bit, and then seem like it's never going back up, so you'll sell it because of uncertainty. You haven't seen it in the news lately, you don't know what's going on with that company, nobody's talking about it, or there's just some other catalyst, like China banning Bitcoin exchanges, things like that, that brings uncertainty to the markets. Sometimes the FUD is real, but usually not, forcing you to buy back in at a higher price than you just panic sold. And never do that. Try to always buy higher than you sell. If you have to wait a while, wait a while. It's a game of patience, really. Dev. As in developers, the guys who write the code that powers the coins. It's important to buy coins with active devs, or developers, as new code updates and feature adds are often the catalyst for a pump. So you don't want people to just take the source code of a different coin, because these are open source projects, a lot of them. Just take that code, create their own business around it, and not actually have any developers for themselves. So yeah. Technical analysis would be TA. If you see TA, that means technical analysis. Reading chart patterns to decipher future price movement. Some call it voodoo, others call it magic money machine. So yeah, a lot of people, they don't really believe this too much, that you can technically analyze, and it's not always perfect. No, you can't always predict the future price of a market. It's very seldomly can you actually predict it 100%. And most people that just start and just begin trading, they will not be very good at this technical analysis. So it's not good to do day trading because you need a lot of technical analysis to do that. So it's probably best to just hold long term if you're just getting in to do long positions. Target, please, sir. If you share your TA on Twitter, you will undoubtedly be asked to provide a target price, as in how high will it go before I should sell it. Often asked in an excessively polite tone, as in, target, please, sir. So the technical analysis and then the target. Asking for a target is considered lazy and probably will get you ignored. Moon, a new, aka Moon, with a W. The war cry of crypto. When the price of a crypto asset goes through the roof, it leaves the stratosphere, it keeps going. If you hear everyone saying that a particular coin is just about to moon, run in the other direction quickly. Moon, so Bitcoin just basically mooned. It went straight up and just kept on going. Basically, you know, going up to the moon. Like a rocket ship. So, and also, cryptocurrencies do this when you least expect it. And usually crypto will do things only when people are not expecting it. So if someone's telling you this coin's about to moon, it's probably not going to. It's probably going to, it might moon, but just not for a long time. Maybe it'll take a couple months or something like that. HODL. When you bought, you're going to hear this a lot, HODL. There's t-shirts with it. Some people use it in multiple sentences. They replace the word hold with HODL. When you bought the top but stubbornly refused to sell in hopes that your coin will regain its lost value and then some. That is called hodling, a misspelt of hold. And holding is seen as a bit of selfless, almost patriotic devotion to the cryptocurrency. I love the hodlers as they keep coin prices up during especially bad episodes of FUD. And this is actually used because someone misspelt the word hold, I think on a forum or a blog post a long time ago, and it just stuck. So that's about it. There's also bearish and bullish. A bearish market would be, you know, the price is going down. Bullish market, price is going up. A lot of people are buying. Bearish mean a lot of people are selling. what else did I put there? On the thumbnail, put a couple on the thumbnail there for one reason or another. So long, short, I put on there long being, buying and holding, expecting the price to go up. So buying low, selling high. Short would be buying high, selling low. Or margin trading. When you're margin trading, you can bet on the price to go down and buy high and sell low and actually profit off of that. So that would be a short. Or anytime you're selling to buy back in lower, that would be your short position. We have HYPE, HYIP, which is a high yield interest program. And there's lots of these. Bitconnect, you'll see these like crazy in the Bitconnect or in the Bitcoin community, crypto community, because they're profitable and people promote them and they make a profit off of promoting these. And basically it's just people that want your cryptocurrency for whatever reasons. You lend it to them and they give you a high percentage, a high interest rate. Some of these are scams and you can lose your money doing that. So something to mention to beginners. Here's another list we have here, crypto lingo, and there's a couple here that were not on the other one, and that actually I didn't even know. So we have the regular, the usual ones here, and then we have ATH, short term for all-time high. Therefore, it means the highest historical price of a specific coin. A whale, a huge player who has a substantial amount of capital. Whales are often the market movers for small altcoins due to their huge capital. So they could really manipulate the markets, whales. Pump and dump. We saw shill, the act of unsolicited endorsing of the coin in public. Traders who bought a coin has an interest in shilling the coin in hopes of igniting the public's interest in that particular coin. John McAfee's been doing this a lot lately. Bag holder, a term to refer to a trader who bought in at a high and missed his opportunity to sell, leaving him with worthless coins. Margin trading, a term for trading with leverage. In this instance of trading, you borrow one side of the trading pair at an agreed loan rate and sell it for the other side of the trading pair. Depending on the direction you believe the market to move, you may place a long or short bet on the trading pair of concern. Also read how to set up 2FA or two-factor authentication. You'll see the word 2FA, it just means two-factor authentication, and you can use something like Google Authenticator on your phone, which is an app, and it just makes it so there's another factor of authentication needed to get into your financial accounts where you're storing money, you're storing cryptocurrency. So an email link could be a second factor of authentication as well, or a text message to your phone. You also see multi-sig, which is a multi-signature wallet. You need two people to sign before funds are released. We have long. A position that a trader takes. To take a long position on something is to believe its value will rise in the future. Short, a position that a trader takes to take a short position of a coin is to believe the value will fall in the future. People are worried about the futures market, investors trying to crash Bitcoin's price by shorting it. This is very tricky because it takes a lot to actually move and manipulate the market, especially with Bitcoin because it's got such a huge market cap. So if you short expecting it to go down or try to manipulate the price to go down, it could backfire on you. And a general rule of thumb is not to short Bitcoin. You also hear people saying don't pick the top. Basically meaning, well, if you see Bitcoin's price chart, you could have thought the top was at one point, and then it went up 10 times after that. So You know, if you pick the top, think it's not going to go up any higher, and then short, bet on it going down, you could lose a lot of money by it continuing to go up, because that's how Bitcoin works. It just has this bullish market trend that when it goes up, it just keeps going up, and it's, you know, hard to break that cycle. And then it consolidates. You might hear the word consolidation as well, or correction. This would be when the price goes down. Every time there's an up or something comes up, what must go up must come down. So the correction would be a good thing in cryptocurrency, because now it means we could go up even higher. And consolidation would mean basically it comes down and then stays at a certain price for a while. Basically, you know, having the price consolidate at that point for a long time, strengthening that price, or creating a bottom or a top. Limit order. A limit order would be an order placed at a future price that will execute when the price target is hit. So stop limits. You can do basically protect your investment, protect your trade. So if you bought, say, Bitcoin at 10,000, you could put a stop limit order to sell at 9,000 if it dropped to 9,000. You wouldn't want to put a regular order in to sell at 9,000, because it would just trigger and someone would get your Bitcoin at 9,000, $1,000 cheaper. But if you put a stop limit or a limit order, you could make it trigger and only go into the markets when it was, say, $1 above 900, so that it does not, you don't actually place that order to sell at 900 unless it's, you know, dropping to that price. Borrowing rate. When you open a leveraged position, you will be borrowing coins at a predetermined rate. This rate will be added to reflect your position's overall profit and loss. Lending rate. Some exchanges have lending accounts. You may deposit your coins into these lending accounts to lend your coins for others to execute their leveraged trades. The lending rate fluctuates throughout the day based on the demand for shorting the coin. Fill or kill. A limit order that will not execute unless an opposite order exceeds this limit order's amount. And I don't do a lot of these, but you know, when you go more advanced, you'd be doing these. And I don't suggest you do margin trading either in the beginning while you're learning. Mostly just do long positions where you buy and sell, buy and hold, and sell in the future. Buy, sell wall. A wall, as seen in the depth chart of exchanges, is an amalgamation of limit orders of the same price target. So this would be the buy wall, the sell wall, and you see how it kind of makes a wall, this sell wall. So if the price were to go lower, it would have to, all these are orders on the markets, and they would have to all be triggered before it could go any lower. So this wall here has a huge stack of orders, basically making it harder for the price to go lower than this, because there's so many people that want to sell at this price and not enough people to buy. So you know, these sell walls kind of stop the price from going any lower or higher. Altcoin. Alternate coin, we talked about that. Everything other than Bitcoin. Circulating supply. The price of a coin has no meaning on its own. However, the price of a coin, when multiplied by the circulating supply, gives the coin's market cap. So, you know, how many coins are in existence? Because if the coin's worth, you know, a cent, it doesn't really mean much until you know how many coins there are. Because, you know, if they only gave out 10 coins, then a coin being worth a cent, you know, those coins are only worth, the market cap would only be 10 cents, right? So you need to know the circulating supply to know kind of judge how expensive the coin is or how cheap the coin is. Market cap. A stock's market cap refers to the market value of the company's outstanding shares. In the cryptocurrency market, the market cap is used to illustrate a coin's dominance in the entire cryptocurrency market. DDoS, short for distributed denial of service. A well-timed DDoS attack at exchanges during volatile movements may be devastating, as traders will not be able to execute any order manually and will be at the mercy of their preset or lack of limit orders. Basically taking a website offline because too many people are trying to access the network. The servers can't handle all the volume. ICO, short form for initial coin offering, which takes a page from the usual IPOs investors know. Coins bought during the ICOs are usually sold for a profit when the coin is first hits exchanges. This is due to the initial hype, which increases demand for the coin. On the supply side, ICOs create entry barriers as the buyer has set up his private wallet to receive the coins from the ICO purchase. Arbitrage, the act of buying and selling on different exchanges to earn the difference in the spread. Arbitrage opportunities occur due to the differences in exchange reputation, community coin preferences, and ease of bank funding. Take note that fees, limits, and prices could change any time when you are transferring your coins between exchanges, especially during volatile times. So some people, even when the markets are down, say you're losing a lot of money today, you could still go and, buy, say you have a coin in one exchange, find another exchange that is selling that coin for more money, and then sell it, move it to the exchange, sell it, and then repeat to profit. And there are lots of arbitrage opportunities, but there are some platforms and companies that are trying to solve this problem by moving all the exchanges to one exchange. Basically create an exchange where you can buy off all the exchanges at once. You can just pick the cheapest of the exchanges and buy. So this would, it would lower the spread between different markets. It's the same coin on different markets. BTFD, buying the fucking dip. When people are running around and selling because of fear, this is the time to buy. And right now is a good time to buy the fucking dip. Moon, extreme bullish movement of a coin. It's going to the moon or it's about to moon. Weak hands, those who cannot be patient and sell at loss when the market is down. See, when I was beginning, this is what I was doing. I was logging into my accounts and just wanting to profit and just basically looking at my coins and saying, what should I do? And I would just sell and just do trades just because I was impatient and did not know how to hold my coins. And, just being impatient for the most part. So now I've realized, there's lots of other things you can do in the meantime. You can learn about new tokens. You can do research, figure out how to use these different programs and platforms and services out there. There's so much you can do in the meantime while you're holding your coins to distract yourself. And only people that are expert traders should be trading daily and doing day trading. Don't expect to be good at it in the beginning. You're probably going to lose money if you try to just day trade in the beginning, because you're not building your knowledge base. You're not... Basically, there's a saying, practice doesn't make perfect. Practice makes error perfect. And that goes with this as well. So just trading daily is not going to make you better. You have to learn from expert traders what they're doing. You need to, learn a lot of things and listen. Listen to what people that are successful are doing. Here we have a beginner's guide to getting started with cryptocurrencies. And I threw that in the link in the description. Also, I've been mentioning this a couple times. We have the market cycle of emotions, or the sentiment curve. Actually, interestingly enough, when the Queen was or the Queen's Bank was asked about cryptocurrencies, this is what she referred to. Cryptocurrencies are not backed by anything but sentiment. The sentiment wave. And this is what it is. It's this wave, this curve of emotions that people trade off of. And you can get familiar with this as well. Stage 1 being optimism, thrill, and euphoria. Stage 2, compliance, denial, hope. Stage 3, panic, capitulation, despondency. Stage 4, skepticism, caution, worry. You can see those up here. Optimism, excitement, euphoria, then denial, fear, panic, despondency. Right here at the top, right? So say Bitcoin, when it hit $18,000, that's the point of maximum financial risk. Meanwhile, this is when people naturally, if they listen to their emotions and impulse, they will buy, right? That FOMO, fear of missing out. But really, that's the point of maximum financial risk. You want to buy when there's fear, uncertainty, and doubt in the markets. That's the point of maximum financial opportunity. And I definitely got into Bitcoin when not a lot of people trusted in it. Now everyone wants to throw their money at me and buy some too, but I'm just sitting there and selling them my own, because really I'm doing the opposite of what most people would naturally do, and that's how you profit. So when they're buying, I'm selling. When when they're selling, I'm buying. So you can also help. You can also help to avoid the emotional roller coaster by being aware of the emotions you are likely to experience. The 5 most common behavioral pitfalls are overconfidence, when investors overrate their ability to sell winning shares, or investment managers. Loss aversion. Research indicates a loss causes about twice as much pain as a gain. Very true. Then a gain causes pleasure. And I was watching a video the other day that I think it was CBC or one of these big television companies produced. It was online, but they produced this video, what it's like to be someone obsessed with Bitcoin. And they followed this guy, this Asian man, and he was saying how he's obsessed with Bitcoin and trading Bitcoin. And he doesn't remember any of the times where it hit new all-time highs. He only remembers when it crashed. Recently, we just had a crash. We're kind of still going through this crash. It really affects people when it crashes. During periods of market volatility, investors experience the same sense of loss more acutely. Chasing past performance. We see this time and time again, but unfortunately, individual investors who abandon a well-diversified portfolio for bonds or even cash may be jeopardizing their future financial security. This recently happened with me when I was looking at Omisi Go. It just got launched on Bitconnect, and I looked into it and saw the previous gains were phenomenal. Something like 50 times gains since it was launched like a couple months before. So it's like what, 5,000%. Yeah, it'd be 5,000% gains. And so I'm like, okay, I'll buy a bunch of Misigo, and this will be my ticket. So I put over $1,000 in a Misigo, and then when it was $8, and then it started it went up for a bit. I didn't sell. Like, it went up to like $11. Wasn't really selling. I was selling a little bit, but not enough, I guess. And it started dropping, and it was around $6 for a couple months. And I needed the money for other things that were cheap that I wanted to buy. I didn't diversify enough. I put all of my eggs into one basket. Not really all of them, but I put a lot of them into one basket. And I had to sell lower than I bought. And I'll never like make that mistake in that sense again, because of how much I realized I screwed up there. So, but you have to make these mistakes to learn and to know how to not make them again. But I'd suggest, learning with a little bit of money. Don't try to, profit huge in the beginning, because you might be setting yourself up for huge losses, chasing those huge gains in those past performances. Timing the market is difficult to... Oh, by the way, and then Omisi Go, after I sold, all I needed to do, and this happens a lot too, is wait a couple months, and then it went back up. So it was about, 3-4 months where it was down, and you start to get that fear, uncertainty, and doubt. Don't sell. Push through that, and you'll be rewarded. Timing the market. And what I was trying to do there was basically time the market. If I would have just waited and not tried to time the market myself, basically I was trying to chase those gains, and I was probably making a right choice by buying in Mexico. It just wasn't the right timing. So you can't time the market. This is why it's best to just hold long term, because at some point you've got to get into those gains. If you're buying a good coin and it's good technology and a good company. It is difficult to correctly predict the market's movements. Failure to rebalance. The risk/return characteristics of an investor's portfolio should be independent of what's happening in the market, and this means selling high and buying low. So the risk, so basically you want to have your portfolio set up where, to the point where you can't have any regrets. If the market goes up, you're doing well. If it goes down, you're doing well. So a good way to do this right now would be to buy Bitcoin and Bitcoin Cash. So if Bitcoin fails, you have a backup plan, and you can't really regret the fact that, if one Bitcoin does better than the other, you can't regret buying one or the other. You can be proud of and glad of your decision, because you had a good balance of risk and return. You're not just trying to make all returns saying, oh, Bitcoin's went up a lot in the past, I'm going to put all my money in there, but you're not setting yourself up for if the markets do bad. But sometimes, what I did with Omisi Go there, sometimes that's a good thing to do just to rebalance and diversify your portfolio. Sometimes you need to sell a little bit lower, maybe just to rebalance it and get into some other coins that might give you better returns in the meantime. So it's all, all about what is... sometimes it's okay to take a small loss if you can make more profits by taking that small loss. So yeah, that's about all for today. We're going to do some giveaways, some contests to earn Bitcoin. So follow our channel, hit that notification bell, and you might win some Bitcoin or Bitcoin Cash or Ethereum in the future. And we'll see you next time, guys. Peace.